Good morning, everybody. Thank you so much for joining us today for the Get Your Growth with Nassau webinar. For those of you who don't know me or are joining us for the first time, my name is Cody Wilbert. I work for URL Insurance Group in the Annuity Solutions Department. URL is a full-service brokerage giving options to agents and clients alike in health, Medicare, life, employee benefits, and of course, annuities. We've been in operation for over 30 years out of Harrisburg, Pennsylvania, and prefer to be your one-stop shop for you and your client when it comes to providing insurance needs. Our goal is to help change your client's life and for them to have a better retirement, a safer retirement, and one where their money is working for them. I bring to you today Jake Quagliaroli, the Nassau Annuity Sales Manager, and a carrier that URL is very fond of. Jake will get into it more, but when they say on this first slide, working harder to be the carrier of your choice, they really mean it. They have fantastic fixed guaranteed rates of over 5%, top income rider payouts, and very competitive rates in the marketplace. And not to mention a brand new product offering in a space that I wasn't aware of that Nassau operated in prior to this. And I think it's really going to excite you as agents who are joining us as well, too. So Jake, thank you so much for joining us today, man. I appreciate you giving us some time and looking forward to hearing some of the new information about Nassau here.
Awesome, Cody. Well, I appreciate the intro. Appreciate obviously our partnership together. You know, to piggyback on a little bit of what you said, we've had a great partnership, a lot of strong opportunities to really close more sales together, and couldn't be more excited to kick off another week here Monday morning with you and the entire URL team. So thank you, obviously, for the opportunity. For those of you jumping on the call, thank you very much for joining us today. We've got, as Cody mentioned, a lot of exciting things to talk about with Nassau. You know, not only just from a product manufacturer side of things, which you're going to see us in an industry leader in a lot of different areas overall. But as Cody mentioned, we operate under that tagline, working hard to be your carrier of choice. And you're going to see a lot of different avenues, a lot of different areas there where we can put more efficiencies back into your business, help you close more sales. We are a U.S.-based company. I know Nassau makes you probably want to think Bahamas. The Nassau name came from our founders who were born and raised in Nassau County, New York. So sort of their way to recognize where they grew up, you know, where they sort of got their drive and motivation to start Nassau. When you think about Nassau overall, the name might be newer to you, but we've been doing this for 172 years. Along that 172-year time frame, we've insured the likes of Abraham Lincoln, something that gets a lot of positive feedback, a lot of positive connections with agents that I speak with as they utilize that fact with clients and prospects that they're working with. On the flip side of it, what you've really seen since the Nassau name came into play back in 2016 is a transformation from the company from a corporate perspective, most importantly probably to you from a financial perspective. You know, what we're doing, what you're doing out in the field is making recommendations and making future promises. And you want to make sure when you're making those recommendations and promises that when the client or your prospect is ready to tap into those benefits, that the carrier obviously is a strong carrier and it's going to be there at their time of need. Well, you see on the screen in front of you, over $20 billion in assets under management, 400,000 plus policies in force. But to me, the most important two numbers, first and foremost, 2 AM Best upgrades in the last 3.5 years. Substantial improvement on that front. Also a solvency ratio that sits at one of the top, as far as I'm aware of in the industry, 106%. Meaning for every dollar of liabilities Nassau has, we have over $1.06 in assets on the book. Very well positioned. I think you'll continue to see AM Best increases. You know, we're one notch away from that A rating. We get reviewed by AM Best on an annual basis. But again, 2 AM Best upgrades in the last 3.5 years is a lot of great momentum forward on that front, backing all those other great statistics that we just talked about. Now let's quickly talk about other efficiencies or other transformations. Cody mentioned working harder to be your carrier of choice, the tagline that we operate under. And you see part of that from a service standpoint. Our speed to issue at Nassau today sits at 18 days. I know, and I'm not going to, call out other carriers. It's not what we want to do, but we know many of you were impacted negatively from a service standpoint last year in 2022. And I'm sure some of that has spilt over into 2023 as well. 17 to 18 day speed to issue. If you haven't taken advantage of our suitability instant decision guarantee tool, This is a tool that we've had around for about a year and a half now, 2 years now. To me, it's a game changer in the industry. Talking with advisors that utilize this tool, think of it like this. You're working on a case, and before you take the time to fill out an application or fill out an e-app, you go into this suitability instant decision tool. You put in about 5 minutes of data that you're getting with the client fact find, that you're going to input on the suitability comparison form anyways. You put it into this instant decision guarantee tool, hit submit. You're going to get north of 75% of applications that use this tool receive an automatic green light. That means this case has already been approved. There's no going back to the client to get initials, letter of explanation, sign this document, sign that document. You know this piece of business has already been approved. For the 23 or so percent that don't get that auto green light, doesn't mean the case is declined. Something just didn't line up with the algorithm. You're going to have direct access to my suitability team. You can pick up the phone, give them a call. They've got all the information that you've already put into that tool. You're going to be able to talk through it. They're going to give you a code to move that case forward. Currently, my suitability decline rate over the last year plus sits at about 1.2%. So business that's coming into Nassau, and you see our suitability guidelines, very agent, very client friendly in terms of getting business through the pipeline. Utilize this suitability instant decision tool, get that business issued, get a policy into your client's hands faster, and get you paid quicker. Leveraging, again, tools and efficiencies that we're working on at Nassau to make you more efficient in your job on a daily basis.
And Jake, if you don't mind, just to jump in real quick, I'll tell you, even from my personal experience, working with clients on that suitability approval, let's say that you didn't do it prior to your actual e-application. So you jump on the first time, you're having the conversation with the client, you jump on, you do the e-app with them, and it gets to this point. It's a fantastic tool when it comes up and says, you've been approved. Right there is an awesome conversation to have with the client already instantaneous with them saying, look, Nassau's looked at what you've given them right here, and they're saying that they approve this portion of it. Obviously, it's still going to go in through a new business review. They're still going to look at it, but up front with the suitability, with the figures that you're providing to them, this case does deem itself suitable right up front from that nature. Now, the reason I bring this up is I've also had it on the flip side before, where maybe to Jake's point, the algorithm doesn't line up, and it does say that it's not approved at that time. The good thing is it's not this big red stamp of like, no, it's not approved. Like, you can't move forward. What's really friendly about it is it actually just says, we'll be contacting you for more information on this case. So right there, you're sitting with the client. It's not like everybody gets the heebie-jeebies and feels really bad all of a sudden that, suitability wasn't approved. It's a very positive message, even on a non-approval to the client. And I just wanted to bring that up because it's gone both ways for us. We've had it where, it goes through instantly. That's a good approval, but we've also had it on the non-approved side, which doesn't happen often. But when it does, it's a very positive message for the client. So you're not getting this, you're not approved and please don't move forward or anything like that with the actual application. So I don't mean to jump in there, but I did want folks to know that, if for some reason you're in the e-app and just going at it from that standpoint, it is positive one way or the other that it does go that way.
Yeah, that's awesome. And Cody, I appreciate the feedback. And I know you guys leverage this tool and you utilize this tool. And it actually, as you were talking, it made me remind me of one other sort of fact. And that's that once you input this data and you get that auto approval, or you speak with the suitability analyst and they give you the code to move forward, you click that next button and it actually imports everything that you've already put in over into the e-application. So you're not going to have to rekey that data. Utilize this tool. Take advantage of this opportunity because, Cody, I think you hit the nail on the head. To be able to sit there, if you're doing it with a client, get that auto approval and show them, hey, your case has already been approved. Now, to your point, we're still going to have to go through and complete the application, but we know that as long as we submit this case based off of the information that we've already done, this case is approved. You're going to move forward and we're going to get a policy over to you. So yeah, again, I appreciate that feedback. Really excited with this tool. We're getting more and more producers. I would say north of 60% of applications now utilize this tool. So as everybody's getting familiar with it, and actually overall, we're roughly about 90% on e-application submits as opposed to paper. So we're seeing again, a big focus leveraging the technology and the tools that we've developed and created. So let's keep things moving forward. Now what we're really here to talk about is the Nassau portfolio. And when we run through, or I guess what I love most about our portfolio is the fact that we really have 4 core FIA products and a multi-year guaranteed platform. But each one of those FIA contracts does something different to the best of its ability, if you will. Maybe you've got a client, we utilize that tool you see on the top, comprehensive, customizable, consistent retirement solutions. If you're looking for guaranteed lifetime income, you've got an industry leader with the Nassau personal income annuity. Maybe you have a client who's looking for competitive income, but they're also concerned about critical care, long-term care type benefits, or legacy protection. You've got that covered with the Nassau Personal Protection Choice. About 4 years ago, we launched Nassau Growth Annuity, our accumulation-based product. And just back in February, we rolled out Nassau Bonus Annuity. So now you've got accumulation and bonus accumulation. So depending on the client's scenario, you've got a product that really maximizes those benefits and helps you leverage what you're trying to accomplish based on the retirement puzzle that you're putting together with that client. Now, as we go through the portfolio, we're going to talk about in a little bit of detail a couple of the contracts. And as we look at those, I'm going to give you a couple positioning and sales strategy ideas as well. So it's not just going to be, regurgitating the product and talking through everything. I want to show you how advisors that I'm working with are positioning these products, where they're using different contracts in different scenarios. Before we get into the FIA side of the portfolio, and as I look at this, I apologize. Actually, we did have a slight rate decrease April 1. Our MIGA rates are 15 basis points reduced. So if you're looking at our 4-year MIGA, was a very competitive 5.25%. April 1, it's still a very competitive 5.1%. So I apologize for the error in these data, but no, every rate that you see on the screen has been slightly reduced by 15 basis points, still putting us at the top of the field in that 4 and 5 year spectum. Cody, I don't know if you had something you wanted to jump in.
With that too, one of the biggest things we're seeing from a MIGA space is obviously sales are booming from that area. People are really interested, and you're looking right now at rates over 5%. So just think about that conversation you have, and I know Jake's going to touch on this a little bit because of the split of the rates there. You get a free withdrawal amount and a non-free withdrawal amount, and that depends on your rate of return. But what I'm getting at with that is we've had a lot of agents having a lot of success using the 10% free withdrawal, having the interest-only withdrawals come out of the account starting 30 days after issue, and providing their client with a nice substantial boost in their income for a 5 to 7 year or 4 to 6 year period that we're really seeing it be very impactful for clients, very impactful for agents. And the conversation is easy. Let's say you have $100,000 and you go in at 5.15%. You're now talking to somebody about having $5,150 a year for that client to be able to take. That's an additional $400+ a month for that client. And after the 5 years, they're getting all $100,000 of their money back. So right now, that's just been a very, very popular topic, very easy conversation a lot of our agents are having. And to Jake's point, those rates, even being a little bit lower than what you see here, are still industry leading rates and are still pushing top of the line here for what we're offering clients.
Yeah, without a doubt. And I think, when you think about sales positioning, and actually I had a conversation on Friday with an advisor, and he goes, the hard part is I'm an FIA guy. I like FIAs. I like the story. It's hard for me to not sell MIGA, though. With where rates are, guaranteeing north of 5% rate, when back in the day, we used to talk, hey, if you average 6% on an FIA, you're probably doing pretty well. If I can give a client 5.5 guaranteed, how can I not look at that story? And while I completely agree with you, the conversation was, the challenge there, obviously, MIGA products pay significantly less to you, the advisor, right?
Yep.
Think about the split annuity concept. It doesn't have to be an all or none. If you're looking at maybe putting money into the fixed account of an FIA contract, maybe peel out $20,000 of a $100,000 case, drop it into the MIGA, take advantage of that great rate, and then put that other 80% or $80,000 into the FIA and let that contract do what it's supposed to do. So again, I just throw that out there because I know it's in some of you guys, some producers out there, it might be a battle that you're having internally of, I love these rates, but I don't just want to be a MIGA seller. I want to have obviously the upside that the FIA does. So think about that as a way to potentially leverage both the MIGA and what the FIA contract does. Now let's fast forward. You saw some of the great rates that we offer on the MIGA. Cody obviously had some key points in terms of where those fit overall from an industry perspective. What I'm most excited about is Nassau Bonus Annuity, a product that we launched in February with a couple different sizzle points. First and foremost, you see on this 10-year product, issue ages up to age 80 offers a 10% account value bonus to the consumer. Ages 81 to 85, a 7% account value bonus to the end user, to the end client. That's a very, we're seeing a number of business, not that you're marketing to 81 to 85-year-old clients, but to have that 7% bonus is a great, obviously, opportunity to incent them to maybe reposition assets that they're not really going to use, that they've got sitting away for grandchildren, child, charity, whatever it may be. Here's a way to really boost that money right off the bat with that 7% bonus, 81 to 85. But really focus, 10-year contract, 10% premium bonus with the Nassau Bonus Annuity. Structurally, you see this is, I mentioned it a couple times, 10-year product, but this product also gives you access to cash. 10% penalty free as soon as 30 days after issue. That 10% is based off of the account value. So that 10% bonus will apply to that penalty free amount. You come in with a $100,000 premium, you've got an account value of $110,000. If that client were to have an emergency and need access to cash in year one, they've got up to $11,000 penalty free available through that 10% penalty free. Not only that, it's not charged back in that first year withdrawal. So you've got that your client has access to cash, and you're not going to be penalized with a commission chargeback if they were in a position where they needed to utilize that. 13 different ways that you can allocate funds. Don't get overwhelmed by that. We really focus on 3 different indices, and we'll talk about that on the next slide. But I want to highlight those 13 different strategies and know that about half of them come with a buy-up option. So we can increase the par rate to the client for a 1% annual strategy fee. Nassau Bonus Annuity, Nassau Growth Annuity, which we're going to talk about next, have a built-in return of premium, or what I like to call a return of fee feature. What does that return of fee feature do? If your client were to elect one of the enhanced strategies, one of the enhanced participation rate strategies, which you see on the screen in front of you, you go through an extended period of flat to down markets, and that fee ends up chipping away at the principal your client had put into the policy. At the end of contract duration or at death, Nassau is going to true it up and make sure your client gets no less than the premium they put into the policy. So at the end of the day, with that return of fee feature, what we're saying is we're never going to penalize your client for trying to maximize upside accumulation or growth opportunity. We're not going to penalize them if we were to go into an extended period of flat to down markets. Now, sizzle point 1 was that 10% bonus on Nassau Bonus Annuity. Sizzle point 2 is the crediting rates that are available on this contract. Right now, we're seeing a lion's share of assets allocating to that 1-year S&P cap. You can see currently on the Nassau Bonus Annuity, a very strong 9.1% annual S&P 500 cap. I also want to point out that when you look at the NASDAQ and the S&P, we talked 13 different strategies. But again, there's 3 different indexes to choose from. NASDAQ 100, S&P 500. Those are pure indices. We're not managing it. It's not managed. It's not vol control. It's NASDAQ 100. It's S&P 500. We do offer vol control with our Smart Passage Index, which is the 200 least volatile stocks inside of the S&P 500. But the real game changer or differentiator that you have with the Smart Passage Index is that it comes with a 16.5% volatility target. Think about that. The average vol index in the marketplace today probably comes, Cody, would you say a 5 to 6% vol target?
Absolutely. Yep, 5 is the most common for sure.
Yeah, and think about that. If you look over the last 2 years, volatility in the open markets has been hovering at about 25%. So in its most simplistic form, and I know this is sort of taking out all the sort of bells and whistles that you have, but if volatility in the open markets is 25%, and you've got a 5% vol target, in its most simplistic form, your client is tracking that index about 20% of the time. The rest of the time, they're sitting in cash. They're sitting on the sidelines. With a 16.5% volatility target, your client has more exposure to the index that it's tracking, giving that client higher upside opportunity. And yes, in highly volatile markets, that can obviously create a scenario where you see negative exposure as well. But remember, we're inside of an indexed annuity. Your client has no risk to principal, no risk to loss. There is no downside. So if we can allocate between an S&P and a NASDAQ and then sort of dabble into that vol control indice for that sort of grand slam home run from time to time, that's what you have with that Smart Passage Index. The last two numbers I want to point out, though, you see the bottom of the screen, fixed index account on our bonus annuity of 3.45%. 10% first year bonus, 3.45% fixed rate. You've got a 13.45 guaranteed return for that first year right now with that client. And know that that fixed rate can never go below 2.55%. Look at that guaranteed annual minimum interest rate that you have with Nassau bonus annuity. Leverage that when you look at other products out there today that are coming in with a 0% floor or maybe 0.5%. You're guaranteed never below 2.55 on that 1 year fixed account, and you've got that high upside of 9.1% on the cap. With every one of these strategies, we offer the ability to put together customized illustration. Cody, the great team obviously at URL can customize these on specific clients that you're looking at. To me, the value of this, though, is if you can get comfortable with, hey, do I want a fee or no fee? Because so often, I'll have conversations and an advisor, a marketer will tell me, hey, I'm working with an agent, with a client that wants nothing to do with fees. While I understand that, by taking a look at sort of the last, best, and worst 10-year period, you can see there is some value to maybe buying up that par rate. Maybe we wait to add that fee on until that client experiences some upside. So we're not chipping away at the principal. We're taking away from some potential gains to maximize. Or knowing that we're coming in at a lower rate than off of the all-time highs, maybe now's the time to buy up that par rate and try and maximize that upside growth opportunity. Just a way, again, for you to get comfortable and familiar with the different strategies and the overall opportunity between the 1 and 2 year reset, the base par rate, or that enhanced par rate that you have with this contract.
And Jake, I'm so glad you said that too, because folks, a lot of times that's one conversation we've been having a lot this year, because obviously the market has been down, right? But to Jake's point, that's a low starting market right now. So yes, we're measuring annual point to point. And if we started here and ended here, well, here's our new starting point for the following year. So yes, if markets are down, you do have a lower starting point going into the following year, which should recoup and give you a better opportunity to get some gains into your account there as well too. But with the volatility control, you're adding just an extra level of indexing strategies to your client's portfolio that they may not have currently right now.
Exactly. So yeah, great point. And no, you can blend premium between all of these different strategies. You can reallocate on contract anniversaries. So to Cody's point, if you wanted to take advantage of coming in at reduced levels to the where the indices are versus their all-time highs, we can go all fee-based, maximize that upside. We can do 50-50, 25-75, or all unfee strategies. So you can really customize that plan based on what you're comfortable with and what your end client or prospect that you're working is comfortable with. Now, before we look at a couple sort of strategy ideas or as I like to say, when bonus annuity versus non-bonus annuity, I want to quickly highlight Nassau Growth Annuity. This is Nassau bonus annuity without the bonus. Same issue age 0 to 85, up to $1 million. But the differentiator that you have, because we've foregoing the bonus, same structures, access to cash, 10% penalty free, 13 different indices to elect from, allocate from, fee and no fee, that return of fee feature that we talked about. But for that bonus, now what you have is higher upside opportunity. Remember with our Nassau bonus annuity, you had a 9.1% annual cap on our Group A states. Nassau growth annuity, you've got an 11.5% cap. You've got a 4.5% fixed rate as opposed to a 3.45 that you had with Nassau bonus annuity. Still very strong 1 year minimums at 2.55%. We're never going to drop that 1 year fixed account. But again, when you're looking at the overall conversation, you're getting a little higher upside, a little stronger caps and par rates, 1 year fixed account, but you're not getting that 10% bonus up front. So the conversation becomes, okay, when do I elect one of these products? Is one going to be better from a renewal perspective? And I want to let you know that we priced and built both of these products with what we call a fixed option budget. What does that mean, or what does that allow? To you, the advisor, to the client or prospect that you're working with, it's going to provide more consistency during the renewal rate periods. This piece that you see on the screen in front of you is something that we update monthly. We're in the process of automating this, so we're going to get it out on our website, so it's not just a manual marketing piece that you've got to track down on a monthly basis. But what we do, and it might be a little hard to see, or if you're able to see it, that first light blue column, what it looks at is the CBOE volatility index. So we're showing you what volatility is at issue and then during renewal periods. Because we go in with a fixed option budget, meaning we're using the same amount of dollars today, a year from today, 5 years from today, to purchase the underlying options that give us the link to the different indices that we're tracking. That really takes one of the moving parts out of the equation. So now you look at volatility index. If volatility is higher during renewal periods, that generally means that option costs are going to be more. Higher option costs mean, unfortunately, we're not going to be able to offer as much from a par rate standpoint. But at the same time, if volatility is lower on renewal than it was the prior year, generally means option costs are less, which is going to allow us to offer higher participation rates. And that's what you see as you sort of continue to scan over to the right. Yes, there are certain scenarios where we had to reduce renewal rates in renewal periods where volatility has increased. But you also see a lot of green, meaning we've not only maintained those rates, but we've been able to increase those rates because volatility is lower. So leveraging that fixed option budget, meaning we're not going in, say, with 5% today, and 3 years we're going in with 2%, and you're the one left explaining to the client why, hey, you were able to get a 9.1% cap last year, but now I'm sitting at 5% because the carrier sort of did this bait and switch, and they dropped their option budget down and volatility increased. So now we're sitting there trying to figure out how we allocate those funds. So again, really, I hung on this process a little much, but to me, when you're talking about accumulation, renewal rate history, renewal rate integrity is something that's big when you're talking accumulation products, and we're going to continue to be transparent, continue to update this for both Nassau Growth Annuity and Nassau Bonus Annuity. And Cody, I see you want to chime in there?
Yeah, so I think to your point, man, that it's consistency, right? That's what you're looking for when you're buying an FIA and you're going with a company with an FIA is you don't want that bait and switch, like Jake said. And a lot of people want to come in and those who are kind of more of your savvy client or maybe have a little bit of history with these type of things are going to ask for these pieces. So these are nice pieces to carry along with you because they may say, oh, I'm not familiar with Nassau, or oh, I've never heard of this product before. What's the rates look like? 11% or higher cap sounds great now, but what's it look like down the road? And to Jake's point, you don't want to see things cut in half year 2 or 3 for your client, and now you're having that conversation year in and year out about how much rates have dropped and really went down on the contract. There's always going to be shifts to rates. But when you can see the green like you see on here, that's a lot of positive impact and a lot of positive things that are going on right now. So sometimes that really shines through when you have these extra pieces of marketing to bring with you and kind of leave and show the client, look, I can show you the renewal rates. This is printed out from the company, to prove to you what they're doing here.
Yeah, because we're seeing a lot of conversation that we're having right now, a lot of traction that we're getting with Nassau Bonus Annuity is exactly that. Products that are sitting there and products are more competitive. The pricing environment today is significantly better than, say, it was 5, 6, 7 years ago. So if you're talking with a client that might have an older FIA already in their portfolio, take a look at it. Chances are a cap rate is hovering around 2.5%. If you can give them a 10% bonus and get a 9.1 or an 11.5% cap, it's a great opportunity to have that conversation, try and maximize that upside story. So let me give you, let's break that down a little bit. Cody just mentioned the 11.5% cap. A lot of the conversations I have right now is, okay, but tell me where Nassau Bonus Annuity versus Nassau Growth Annuity. And I think the easiest way to put it, or the old way to look at it is, okay, are we talking about old money or are we talking about new money? Well, what do you mean, Jake? Well, if I think about new money, I'm thinking about sitting down with a client or a prospect that I'm working with, and they've got $100,000 sitting in a checking account or in their mattress, or, they just recently received an inheritance. That's money that the client really doesn't need much of an incentive to move. We're not trying to overcome a surrender penalty. We're not trying to overcome market loss. What we want to do is maximize that upside. So let's look at that new money and think Nassau growth annuity. Let's maximize par rates, let's maximize caps, and let's get as much growth as we can. When I think old money, we're obviously talking about money that might be in the markets, might have experienced 10, 15, 20, 25% adjustment over the last couple of years. We're sitting in an older product that was issued 5, 6 years ago. There's a 3, 4, 5, 6% surrender penalty to move, but I can justify it because the cap's at 2% versus 9.1% Nassau bonus annuity. So that sort of is the underlying premise. But what I want to point out right now, in the pricing environment that we're in, to me, Nassau bonus annuity is going to be a solution probably more often than not. So what I've done here is I've taken different average returns. You can see on the left-hand side of the screen, we're looking at a 5% and a 10% average return. And if you look at the numbers, at the end of 10 years, Nassau bonus annuity is really coming out on top or just about equal overall from a value perspective. Take a look on the right-hand side. We're looking at participation rates. So 37, roughly 35, 45% par rate, whether we're looking at Nassau bonus annuity or Nassau growth annuity. And same thing, 5% average return over the next 10 years, Nassau bonus annuity wins. 10% average returns, Nassau growth annuity wins, but it's overall very minimal in terms of the value. So where, I guess I would say, in the pricing environment that we're in today, with the renewal rate integrity that we're at, it's going to be hard not to look at Nassau bonus annuity as the product solution. Now, where maybe does it come into play? Again, if I'm an advisor or a client that I'm working with, hey, I think we're going to bounce back pretty quickly. And I anticipate we're going to get back to more of that average of 15 to 20% average annual returns in the S&P. Okay, then maybe Nassau growth annuity is the play because that 11.5 versus 9.1 cap is going to be significant. So again, significant returns over the next 10 years, that to me is a slam dunk for Nassau growth annuity. But if you're thinking 10% is at the most what we're going to see, again, in the pricing environment that we're in right now, Nassau bonus annuity might be a product that, regardless of old or new, a product that you might want to look at. Now, let's quickly transition, and I want to talk about personal income annuity, because what we were talking about prior to is obviously accumulation. And I'm going to show you another sales concept or strategy at the end of the personal income annuity structure. But just like the product name says, this product was designed for a client that knows we're taking a bucket of assets and we're transitioning that into a guaranteed lifetime income that I can never outlive. We're trying to cover a fixed income gap that I have, that Social Security isn't meeting all of the fixed income needs that I know I'm going to have when I retire. Medical, housing, food. Let's look at personal income annuity. And once we uncover that that's the focus or the goal of a bucket of assets, the only question you have to ask at that point in time is when. When are you looking at making that transition from accumulation to distribution? If it's within the first 3 years after issue, we're going to look at the personal income annuity today strategy. That today strategy is going to give your client an immediate 30% bonus to their income account, not their accumulation value, their income account. So they come in with a $100,000 premium. At issue, they have an income account of a guaranteed $130,000. If your client defers 1 year before activating that guaranteed annual lifetime income, Nassau is going to add another 7.5% bonus on top of that 30. And if they defer 2 years or 24 months before activating that lifetime income rider, we had another 7.5% bonus, giving your client a full guaranteed 45% increase to their income account. If their time horizon was a little bit longer, so we're thinking 4, 5, 6, 8, 9, 10 years down the road, that's where we're going to look at the income tomorrow rider. And instead of getting a big upfront bonus, here what we do is we grow your client's income account at a guaranteed 14% simple per year for up to 10 years or until they activate income, whichever comes first. The ability to put together customized illustrations. Simplistically, it's a one-page illustration showing a side-by-side comparison of income today or income tomorrow. So you can really sit down with that client and say, okay, when are we looking at making that move? when are we looking at activating that guaranteed lifetime income rider that you can never outlive? And it allows you to play with the numbers, to talk through the numbers with the client, all on a guaranteed basis. Not only that, back earlier this year in January, we had an increase to the payout factors by as much as 18%. Nassau Personal Income Annuity, we used to be extremely, extremely competitive for a client looking to take income anywhere between 30 days after issue through about the 4th year. With that 18% increase, we are now coming up from everything I'm seeing, 1, 2, or 3, pretty much anywhere from 30 days after issue through that 10th contract anniversary. So we're providing that industry-leading lifetime income that your client can never outlive, and we're doing it competitively across the board. Cody, I know you've got something to share maybe in terms of competitive analysis or what you're seeing with the overall placement of this product.
Oh, absolutely. And to your point, what's been really, really nice is, we've always had that conversation with folks of the first 3 years, you'd see this product come up and you'll see it boost and with those bonuses, because that's really, hits home with a lot of folks when you talk to them about it. But another thing to hit what he just said is we're seeing it at 4, 5, 6, 7 years now where this income rider is performing very, very highly. And that conversation is something you have with the client at time of issue. So at time of issue, you're letting them know, hey, if we're going to take it in these first 3 years, we have a really good setup over here on the today strategy. However, if you're planning for 4 years or more, we need to start looking at the tomorrow strategy, and mainly because those bonuses will go away, but you will see a beautiful roll-up and accrual on the tomorrow side that is really unmatched in the market right now. You don't see guarantees like you see on that side of things.
Exactly. So a client looking to make that transition to an income perspective, but concerned about market volatility, concerned about a lot of different things. Here's a way that you can guarantee their income account is growing at 14% simple per year. Now, I want to show you a couple sales strategies, a couple concepts. And I won't call it arguments, but I get into conversations with a lot of advisors because, what income has become is almost like MIGA. It's almost become like a commodity. We're getting away from the story. And we're just saying, okay, who is the highest income? But here's what I want to point out. What we've done at Nassau with personal income annuity, and I know there's a reason I didn't show you the rates on personal income annuity. Because if you're selling accumulation, you want to look at Nassau bonus annuity or Nassau growth annuity. If you're selling accumulation and possible income, you want to sell Nassau bonus annuity, Nassau growth annuity, and leverage that 10% penalty free. If you're selling income, I want to sell a product that's going to maximize income. But not only maximize income, minimize taxation to the client. Because what can taxation do? It can take a top income and severely reduce it because that client has that tax liability that they have to offset as well. So what you're seeing on the screen in front of you, and you've heard me mention with the today bonus, with that 14% roll-up with the tomorrow rider, those are income account or benefit-based bonuses or roll-ups only, meaning they have zero impact to the accumulation value, which conversely means it has zero impact to your client's tax liability. They are not going to be taxed on that industry-leading 45% bonus, that industry-leading 14% roll-up, meaning that's more money. Yes, Nassau is using that value to calculate that guaranteed lifetime income, but because they can't walk away with those bonuses or roll-ups, they're never going to be taxed on that. And take a quick comparison. Here we're saying clients in a 22% tax bracket. They're in a product that's providing income, but also growing at roughly 6% per year. On a $100,000 premium, that's roughly $1,300 in tax liability to the consumer. Personal income annuity, let's say they kick out the same income amount. Personal income annuity, your client's going to have an annual income of a monthly income of roughly $614. Because of that $110 monthly tax liability, with that 6% growth, that same product that was kicking out $614 is now kicking out $504 because we've got $110 monthly, again, tax liability. Now, again, I know that's simplifying it, but I want you to think about it's not always just about what that income number is. How are we getting there, and what is the end impact to the client I'm working with? And let's take it a step further. Another sales strategy or way we're looking at. We talked about the split annuity concept of the multi-year guaranteed annuity. along with maybe an FIA product, whether we're talking income or accumulation. But I'm also having a lot of conversations like this, and we're seeing more and more of this because, again, what we're trying to do is maximize income, reduce tax liability to the client. So this client, $300,000 deposit, 68-year-old client, they were looking at deferring income 3 years or until they turn age 71. You can see with personal income annuity, what we're going to do is drop in $175,000 into personal income annuity. That's going to generate, after a 3-year deferral, over $15,500 in guaranteed annual lifetime income for that client for the remainder of their life. After 10 years, we've paid out $155,000 in income. We've taken that remaining $125,000 and we've dropped it into the Nassau growth annuity, maximizing that accumulation story. And then you can see 5 years down the road, that client maybe they're looking for some additional income, maybe they're trying to help out a family member, whatever it may be, donating more. We can use that 5% withdrawal to meet that income need, but we're also, look at the account value. We're replenishing the value that if we had gone into the income account only, we would have reduced that full value and only had that guaranteed income for that client with minimal, again, benefit to pass on to any potential beneficiaries. So a lot of different ways that you can really structure this story, structure this conversation. Again, if you're working with these types of scenarios, give Cody a call, give URL, the great team that they have, and talk through different ways that we can maybe structure and set up a retirement puzzle. I'm not going to take a lot of time on personal protection choice. I did quickly want to highlight this. It's a product that provides a competitive income. Same income today, income tomorrow rider that you had with personal income annuity. The payout factors are slightly reduced, so you're not getting as much from a guaranteed lifetime income perspective. Before that slightly reduced income, you can attach our care protection benefit, which is going to enhance the income your client's receiving by up to 250% if they were to go into a nursing home. It's going to enhance the income that they're receiving by up to 175% if your client's not able to fulfill 2 of 6 ADLs and needs in-home care. Not only that, with our family protection rider, we've got a 100% lump sum death benefit payout feature that's growing at up to 10% simple per year. So with personal protection choice, you're covering an income need, a critical care, long-term care type concern, as well as legacy protection inside of one product with one premium and no underwriting that you're typically used to with products that provide these types of benefits. So I quickly wanted to highlight that before we close things out. For partnering with URL, one of our preferred distribution partners, every premium dollar that you submit to Nassau will qualify you towards our very popular, very value-rich Nassau Elite program. To qualify as Nassau Elite, it takes $1.75 million in qualifying credits. A qualifying credit is $1 of FIA premium equals 1 credit. $3 of MIGA production equals 1 credit. If you hit that $1.75 million, what do you, the advisor, get? First and foremost, compensation bonus. Your first year qualifying, we're going to pay you retro to $1, a 50 basis point bonus on all FIA sales, 15 basis point bonus on all MIGA sales. Every consecutive year you qualify as Nassau Elite thereafter, you'll get 75 basis points on FIA and 25 basis points on MIGA production. We talked about the service opportunity that you have at Nassau. But let's take it a step further. As a Nassau Elite partner, you will receive a dedicated new business and post-service case manager, one specific person inside of Nassau to work your business. And last but not least, if you're one of our top 50 qualifiers, you and a guest will join us. Our 2024 trip location based off of 2023 production is at the Viceroy Los Cabos. Last year, number 50 came in at about $2.5 million in production. So attainable, value-rich program. Again, our way of thank you for seeing the value of the Nassau portfolio, for working with Nassau with one of our valued distribution partners, URL. And I can't say enough about our partnership, Cody, the entire team, and what they continue to offer and do in terms of providing support for you out in the field. So when you put it all together, you've got a very value-rich product portfolio, whether we're looking at guarantees or accumulation. You've got a lot of great opportunities in terms of value incentive with the Nassau Elite program. Cody, again, I want to close things out by thanking you again for the opportunity to present today, for your partnership. Thank you for setting this up. Excited to do this on a Monday, so hopefully, everybody on the call will be energized and ready to go and close some Nassau business this week. But I want to kick it back to you to wrap things up. And again, thank you for the partnership. Thank you for the opportunity to be on the call here this morning.
Yeah, absolutely. And Jake, thanks again for joining us. And I agree. I like kicking this off first thing right after a holiday. That's fantastic. For those of you who haven't been on this software before, there are handouts available to you. Jake did a good job of putting a lot of the brochures out there for you, as well as this annuity portfolio that you can kind of quickly use as a cheat sheet for yourself on some of the highlights of each of these products. But something to just keep in mind, something that you see at the very top of the sheet there is committed to comprehensive, customizable, and consistent retirement solutions. And I want you to take that away from today. I've talked to you before about the guaranteed rates that they have. I've talked to you before about the income that Nassau has, and we've even talked about the protection before. But right now, that space with the bonus annuity is a real home run for a lot of people. And it's a real home run for Nassau and URL to add that to our portfolio as well. One big thing to keep in mind with that product, as Jake alluded to, is use that to your advantage. When it comes to speaking with clients about FIAs right now, we know there will be some bounce back to the market. We don't know when, but we know there will be bounce back to the market. But why not take that first year for your client, give them a 10% bonus, use that fixed rate on the contract, and really secure your client a guaranteed higher than 10% return, with the protection of the minimum guaranteed interest rates built into that contract as well, too. So to me, that's a home run on years that you're meeting with clients and the market is not doing well. You still have those consistent minimum guarantees and those fixed rates that you can go back to with your client and always lock in those gains as well. So a lot of really positive, good things here today to go over. Like I said, there'll be handouts as well. And then I will follow up this webinar for any of those who joined today, or anyone who signed up in general will get a copy of the webinar as well for you to review at your own leisure or go back to, or maybe hit on some of those points. There was a lot of good sales points Jake put in here that I want folks to really just review. Feel free to call us. We will review them with you and go over them as well. But thank you so much again, Jake. Looking forward to another strong year with Nassau. I'm really looking forward to this product taking off as well, too. So thank you again for sharing everything today. And everyone, happy selling. Good luck with everything, and wishing you the best.